Good afternoon, everybody. Very pleasant day to all of you. This is really a great opportunity and platform for us to get together and discuss about the future of finance, especially in terms of how things have evolved rapidly from technological perspective, from mindset changes, and the way we approach financial services in general. Without further ado, I would want to give some background in terms of what we're going to discuss today based on the excellent background of our panel members today, Cecilia, John, and Hock. One thing that we know for sure is the word digitalization has many definition and connotation in terms of how it influenced the background and how things developed so far. Maybe for the last 7 years, the word digitalization has been very much used interchangeably by many key stakeholders. And definitely for today, I would want to make sure that we touch the specific context in terms of how we want to discuss about this and how it relates to future finance. So for today, we really want to talk about the development of 3 things. One is on talking about embedded finance as part of how these actually now become a solution to many of the lifestyle issue, both for retail segment as well as facilitating financial services providers, especially the intermediaries, to be part of various ecosystem within and beyond financial services. Secondly, how all this development can actually reach out to particularly the unserved segment, for example, in terms of how we onboard them and how we continuously service them for those who probably living in the rural or remote areas, as well as when we talk about businesses, how do we then help those micro and nano SMEs and making sure that they're able to scale their business and facing those challenges where they have in general, a low level of literacy and understanding about basic finance and technology. And third, and definitely not the least, is in terms of how we try to manage the mindset of certain key stakeholders, especially the policymakers, when we talk about the digitalization from a decentralized finance perspective. And this is something that really we want to discuss today. So to begin our conversation today, I really want to get a broad overview from each panelist about what do you see as the latest key digitalization initiative based on the context that shared just now, and what do you see as significant and deemed as a game changer from your specific role for each and every one of you. Maybe we start with Cecilia first. Over to you, Cecilia.
Thanks, Ridzuan. So for this topic right now, digitalization, to me, the most interesting thing that I see currently would be the digital currency that's issued by the central bank. So we all know that DeFi is actually moving, is growing, and obviously the central bank wants to be part of it. They are evolving, and we all are very familiar with central bank money because it's just safe, it's just liquid, it's just have integrity, and I think that's why the central bank also need to evolve to fit into the digitalization part of the economy. So what are the advantages that I see in the digital currency is that in middle term, that with this digitalization, then we would have better cross-border payments, and of course, having lower costs, and of course, and also improving efficiency across borders. We will get our money faster, obviously, and I think it's good for the general retail use and the consumers. But in the world of DeFi, we can consider, I think the game changer would be when digital currency gets involved in the platform of DeFi. I think that's something very interesting that I would like to see, that the digital currency actually are on the DeFi platforms. That would be a main game changer on how the DeFi game is being played right now.
Thank you, Cecilia, for that thoughts and for sharing your view on that. What about you, Jean, in terms of what you think constitute as a game changer and things that interest you at this point of time?
Yeah, well, I think it's interesting because I have a completely different view. So I guess it's good that amongst the panelists, we have opposing views. My view is that, I mean, there's something like 100 central banks around the world working on CBDCs. And I think pretty much all of them are not going to succeed. These are central banks are not technology companies. They don't have the technical competencies. So I think the only one that'll succeed is China, because they are just very good at this. And they've also banned Bitcoin and all other cryptocurrencies so as not to have any competition. So I think the Chinese one will succeed, but practically every other one will be either a failure or a non-event. And also, I don't think central bank digital currencies fit into DeFi because technologically, CBDCs are not actually decentralized. They will be very centralized. So it's incompatible technology, really.
That's very interesting perspective, JY, that you have in terms of sharing your thoughts about the rate of potential success of CBDC and how actually it actually intertwined with the definition of DeFi going forward. Yeah. What about you, Hock? You've been with the fintech and you've been with now. I mean, you are now with the blockchain association in Singapore. What excites you in terms of digitalization as a whole in the context of your role and your experience?
Okay, thanks, Ridzuan. I don't see that there is a single technology or innovation that is significant. I'm seeing a fusion of all these innovations and technologies coming together at the right time. So obviously, we can't not talk about decentralized finance nowadays. So definitely decentralized finance is a very important and significant development. But decentralized finance will need to be evolved to be more regulated in order for it to gain mass market acceptance. And the other innovation that we see almost at the same time as DeFi took off was the NFT, non-fungible token. And non-fungible tokens, we see that it's not just being applied in digital collectibles like NBA Top Shots, but it's also being applied to digital arts and more recently applied to gaming and gaining a lot of acceptance. So one can easily think of Axie Infinity, whereby 60% of the users are from just the country of Philippines alone. And that might have significant implication in terms of how financial services could be delivered through a gaming experience. Next, I will see that together with this will be the rapid development of stablecoins and CBDC. So my view is that the market is big enough for both stablecoins and CBDCs to coexist. And I would think that they present the last mile connectivity to the mass market. Again, like I shared earlier, all the above services will need to be delivered in a more regulated manner to give sufficient investor protection and to make sure that financial stability is not affected. But if you look at all these together, right, they are serving the foundation for the next phase of development, which is metaverse. And I think some of you might have heard of the news that Facebook might be rebranding themselves very much in line because they are going big into metaverse. In a metaverse world, whereby through the augmentation of hardware such as headset, haptic suits, or even omnidirectional treadmill, the boundary between the physical and virtual will becoming blurred or even merged. And to run the metaverse well, you need all the AI, big data, and cloud computing, because you need all this technology in order to do metaverse well. And in the metaverse, I think finance will become more immersive. So nowadays we talk about embedded finance, but I think in the metaverse, it will be immersive finance, whereby consumer services will be consumed in a more experiential manner in a highly immersive environment. Yeah, so that's my view of these are the game changer.
Very, very glad that you shared all those things, or all the three of you. In terms of one, Cecilia talked about the need to have, you mentioned about integrity and the interoperability that's important. JY talked about how China would be standing out from the rest of the other countries because of they simply are good at what they're doing. And Hock, you talk about the fusion of many technology that will come together in terms of creating a new foundation that will then drive and thrive the new future of finance, among others, that's going to actually pave their way through. And then I would like to go directly to Cecilia to ask about, I mean, your company is really providing technology to other companies in terms of providing liquidity on multi-assets and as well as on trading technology. So with these evolution of many things, DeFi, Metaverse, and CBDC, as well as stablecoin and many other things, how do you then foresee the technology that you provide to your customers, particularly in terms of making it relevant to what they probably need going forward? Because it seems that the technology that they have now compared to the potential need in future is really different. So share your thoughts about how do you think that you can cope in terms of making it still be relevant for going forward?
Yeah, so I think from a tech solution provider perspective, we will try to always be innovative. We will try to always stay ahead of the game. And this is why I think in Broctagon, we do try to, foresee what the market need instead of, waiting for the market to have that need first. And then we will do something to cater for the need, right? So we are aware of there are certain issues that in particular in our area or rather in our specialization of crypto solutions that we do see that is certain type of liquidity needs or rather issues that the crypto market is facing as overall. And we do want to create a certain type of awareness and inclusion of crypto assets into the mainstream. We see digital assets AUM increasing from, in 2020 it was just 25 billion, and then it goes into 72 billion in 2021. Is a triple type of AUM growth here. So we do want to have a solution that caters for the institutional crowd. We do see like BlackRock or even Goldman, JP, Citi, they are taking a stake into the crypto space. And this is something we want to address, where liquidity is a big concern for the institutional space. And we also observe that, in the big world of the crypto exchanges, it does, the liquidity is always concentrated in only the top 3% of the wide world of the crypto exchanges. So out of that 3%, it probably only accounts for less than 25% of the trading volume out there. So we have not even talked about OTC desks and the P2P side, right? So this is what we are trying to aggregate in all the liquidity into a single pool where everybody will get a same level playing field. And generally, the institution do want to see certain type of transparency in this space. Yeah. And having said that, we are also going to go into the crypto space with the Labuan entity. So yeah, so we will also participate in this space as well.
Fantastic. Thank you, Cecilia. I think that really gave us a little bit of insight in terms of how you are planning to stay relevant going forward, because as you mentioned, the digital asset AUM almost tripled, yeah, in terms of the value, and the concentration is really, I think it's important for us to understand in terms of where the value are, and that would actually give us a clear direction in terms of where to invest and what should be the focus of the investment. And talking about that, I want to go to JY in terms of asking about as a firm that is trading on forex, commodities, and all those stock indices. Do you think that with the emergence of the NFT and the ability of blockchain to offer better, what we call ability of participation, sorry, how do you think that all this technology could facilitate better awareness, transparency, especially for those who are not familiar with all these new approaches and platform? And secondly, how do you transition existing customer towards this new type of digitalization?
Yes, thank you for the question. So I think in our industry, what we basically sell is risk. We sell our clients the ability to take risks. I think it's really important to disclose these risks in a very clear and intelligible way, so that customers who take a position in the markets with a certain type of contract understand very clearly the risk that they take in terms of leverage, in terms of contract characteristics, in terms of volatility of the market, in terms of propensity of the market to experience external shocks. So I think this is not necessarily dependent on the underlying technology used to offer services to the client. It is for the companies offering these services to make a very deliberate and conscious effort to be very transparent to their clients and to very clearly disclose the risks and the characteristics of the products which they offer. So in short, I don't think it's very technologically dependent, except that technology provides a lot of new channels in which to make this communication. So for example, you can publish videos on YouTube, or PDFs, or organize webinars, or podcasts, or discussion forums. So the technology opens up the communication channels. But in terms of communication and transparency, that needs to be a decision of every company to be as transparent and honest in their operations as possible. The other question was about the
transition of your existing customer towards digitalization, because they are familiar with what they are doing now. And as you mentioned in your first reply just now, there's many new channels for this to actually be shared with the existing customers. So how do they then address, or how do we then help them to address in terms of getting themselves familiar with these new approaches? Yeah.
So I think this is really about usability, which is a very difficult thing to get right. If you look at applications like Facebook, they're actually very, very complicated. There's a lot of features. There's a lot of things that you can do with your Facebook. But everyone is on Facebook and everyone knows how to use it. You can put a Facebook app in the hand of your elderly aunt or grandma, and she'll be able to work herself through it. So I think it's really about usability, because often in our industry, things can be complicated. Explaining contracts for differences or cryptocurrencies, or all these things can be quite complicated. So to make it usable is the challenge. So what we're seeing in the cryptocurrency space now is the emergence of some applications like Moon, which are really usable. So yes, I think that is the effort, but it's a hard task. It is not easy to make something complicated usable and simple.
Thanks, Jewa. I think that's really hit the spot in terms of the issue at hand when we talked just now about the fact that the low literacy on technology give a lot of problems for people to understand some of the new risks that actually has emerged because of introduction of certain new approaches. And I think one other things that I also noticed is the language barrier is also an issue when we talk about those really living in the remote areas, or those who are not exposed to what we are familiar with. But we'll get to that later. Hock, you have been involved with fintech, and that was actually probably, in my opinion, the beginning of many new things that actually has been progressing so far, and now you are in a blockchain space. Share with us about the response by the incumbent as well as the new generation financial services providers, based on when they first encounter fintech, and now with the emergence of all these new things, particularly relatable to the blockchain technology. How do they respond, and how some of them actually react in terms of whether pushing back or aligning themselves to make themselves to be still relevant with what's going on? Share your thoughts about that.
Yeah. So 5 years back, I started in fintech in an incumbent insurance company as the head of a digital office, looking on how to digitally transform the organization, because fintech was all the rage. But I remember vividly at that point in time, the initial reactions from the traditional financial institution. They view fintechs as a competitor. But over time, they realized that consumers still prefer the strong brands of financial institution, and for financial institutions, they already have a large customer base. However, traditional financial institutions are not so strong in delivering a much better customer experience. They are not so savvy in new technologies. So then they started to collaborate more with fintech companies through the typical playbook, like organizing accelerator programs, having its own dedicated innovation units. The other thing is that, and in particular, I'm speaking from the perspective of Singapore, because we are a very small market. So 80% of the fintechs in Singapore are B2B or B2B2C. So again, you can see that collaborating with the financial institutions are what most of the fintech companies are doing. But if you look at how fintech is being delivered now, right, it is still largely running on top of traditional financial infrastructure. So there's still a fair bit of inefficiency involved, even though it's fintech. So when we move to blockchain, then it's a totally new product itself. You can say that there are no incumbents at all in the first place, or the incumbents are actually the crypto firms themselves. And so I think that is the biggest difference. But over the last 12 months, we see a lot of institutional interest in this particular sector, especially with the increased regulatory certainty. For example, like I can almost guess that the crypto adoption in Singapore rise from a low of 3% 3 years ago to about 8% in Singapore. So you can see that there is rapid adoption now, but the clientele is divided into two camps. One is the crypto native, that they will go with the crypto native firms. And the other group will be those who are interested to be involved in crypto, but they will prefer the safety of going through traditional financial institutions. So I think this will be the key difference. We are seeing a lot of banks now investing heavily in building their crypto offering, whether doing it in-house or most of the time working with other startups to provide this role. So you can see that the difference between both is really, for blockchain, it's a totally new market by itself with no incumbents. So somehow the difference is really, they enjoy some similarity. There will be collaboration, but the difference is really, I think, for blockchain, I think the new players has a much better chance, but you need the traditional player in order for mass market adoption to follow. Thanks.
Very interesting perspective, like in terms of collaboration being the key enablers for the incumbent and the new providers of the financial services to work together. And this nicely segue to my next question about, I mean, I still want to follow up with, like, in terms of when these two different type of institution come together, do you think that the existing infrastructure would be able to cater for the transition in terms of, especially for the native customers who are really preferring the new way of doing things, and care lesser about the name of the institution? They go for efficiency, they go for value, they go for effectiveness. So do you think that the infrastructure that's now available, mostly serving the incumbent, would be able to cope with the new demand and the new way of doing things going forward? Hock,
so the question is for me.
Yeah.
So and because most of the crypto offering, right, the native one will be based on decentralized technology, and that's the beauty of it. It is more scalable. Of course, like we hear that, like the key coins like Bitcoin and Ethereum, they are very much congested. But over the last few years, we see a lot of innovation, a lot of maturity in terms of the technology. So there are really a lot of alternative platforms that are much more scalable, much more efficient. And if you think back about the crash last year in March, right, in the crypto market, it was able to handle well despite the market dropping but almost half of the market value in a very short period of time. But due to the decentralized nature, while it's not perfect, but it was able to cope with this very significant market disruption. So I think in future, decentralized technology will play an increasingly role, and coupled with technology like cloud computing will make it even more scalable, which again ties in with my earlier narrative that this will then build the foundation for a metaverse economy.
Okay, all right, cool. So we definitely have tried to understand in terms of how the incumbent and the new players come together. We certainly definitely talk about how just now JY talked about the risks that needs to be disclosed, and not really tech dependent, but more about making it more understandable by all the key stakeholders that's involved in this space. So now a little bit sensitive in terms of when we talk about decentralization. I want to ask Cecilia, do you think, in your opinion, how do you think that financial regulators stay relevant going forward? Because when we do decentralization, a lot of the regulation and the discipline actually comes from the participant themselves. So then how then regulators stay relevant, and how do then you think the industry need them to play? What kind of role do you think that they need to play? I mean, love to hear your opinion on that.
Okay, so for regulators in the DeFi space, I think the spirit of the DeFi, or rather the beauty of DeFi, is skipping through all the intermediaries, straight to the source. Everybody deal with each other without interventions in between. Of course, regulators know that this is growing, and they are definitely moving to establish the regulatory that is circulating around the DeFi space, right? Like just now, Hock said that there are up and coming regulatory certainty in Singapore, that the regulators are trying their best to keep up with the pace of technology changes. But on the other side, they also need to keep in check the investors' interest, the consumer interest. So what happens when a platform goes rogue, right? So how are they going to handle it? I think this is something that the regulators cannot sit out of it, especially when it's their citizens, right? They can't simply sit out of it and say, oh, they are not regulated by us. But I mean, I'm a citizen in this country, so you have to protect me somehow. I guess that's the mentality of investors like me, you. Everybody still have a kind of thinking that regulators should come in and do something about this. But we see regulators trying to evolve. They try to set up a sandbox. They try to have pilot runs on how to handle such, or rather they try to get expertise to come into the space and try to guide them along the line. We have also regulators who comes in and says, okay, I'm going to use whatever I have now and I try to regulate you. And then I try to tweak it a little bit, and then I will try to use whatever I had for capital markets, and then I try to regulate you. And that's where they come in and say, okay, I'm going to bring you, I'm going to say, oh, crypto is a kind of asset, and where does this platform falls under? Is it under the payment system, or is it under a securities license? In this case of Hong Kong, it's falling under additional license called the VASP. And then in Singapore, we have the Payment Service Act, right? So I think they are trying to navigate, but the more important thing is that because it's so borderless, it's very important also for regulators to work among each other. Okay. But right now, we don't have a single framework within the regulators. So it is very difficult when regulators are trying to work with each other in this aspect.
Okay, thanks, Cecilia. I have a question from audience, from Owen. His question is, why do you think Bitcoin has succeeded, but the blockchain industry has failed so far? John or Hock, do any one of you want to try to attempt and answer this question?
Sure.
Yeah.
Hock, if you wanted, I'm fine.
No, you can start. Yeah.
Yeah. Okay, well, yeah, there was this whole phase, I think, a few years ago where everyone was going, blockchain is good, cryptocurrencies are bad. But okay, I think it also dovetails a bit into the last question about DeFi. I think an important point to mention about that is something like 98% of DeFi projects are not DeFi at all. They're actually companies, and they don't want to be subject to regulation, so they pretend they are decentralized. So they set up a GitHub repository, they put their code there, they say they're open source, and they sort of pretend that they're decentralized. And so they say, we can't be regulated because it's DeFi. So I think that that's a game that regulators need to not be fooled by, right? And when you have companies where clearly it is actually centralized, then the people behind the project need to be regulated if what they are offering is a financial product. So I think it's the same on the idea blockchain is good. A lot of these, I mean, you hear these stories about private blockchains. I mean, it's an oxymoron. It makes no sense to have a private blockchain.
Yes.
So that's why all these blockchain projects fail, because they were centralized. And if you have a centralized project, then use Postgres, use MySQL, use Oracle. Don't hassle with a blockchain because it's completely pointless. So of the real DeFi projects, the real decentralized projects, they're actually rather few. And of course, there's obviously Bitcoin and a few others. So they succeed because they are really decentralized. This is true blockchain.
Thanks, John. I think anything you want to add, Hotline?
Yeah, I think the challenge is that because every day it's a lot easier to write an article on the prices of Bitcoin rather than writing some article on the enterprise blockchain, which is not succeed at all. And the other challenge is that I always say that blockchain technology, it is neither a hammer looking for a nail to hit, nor it is a solution for every problem. In certain kind of use cases, it is very, very suitable, especially those that requires a lot of stakeholders. Everyone will need to rely on a single source of truth, and especially it's cross-border in nature, and the provenance or the history of the transactions are important. Those are the use cases that we start seeing large-scale implementation in terms of like trade finance, supply chain, or even supply chain finance. So I don't think that blockchain industry has failed itself. It's just that it will take a longer time, because buying a Bitcoin is a lot easier than building an enterprise blockchain system and getting traction to use the system. Yeah.
Okay, thanks, Cecilia. Thanks, John, in terms of sharing your thoughts. I'm afraid we are out of time, and I know this is a really very interesting topic, and definitely not an easy thing to conclude and find a conclusion in terms of how the future finance is going to look like. And I wish that we have more time to discuss and to get clarity in terms of how this actually would pan out. But thank you for sharing your thoughts, and thank you for sharing your view, everybody, John, Cecilia, and Hockley. And thank you, Labuan IBFC, for giving us this platform to discuss this particular interesting topic going forward. Thank you very much.